Hello viewers, welcome to my channel. In previous video, I talked about the overnight fund and ultra short term mutual funds. Today, I will explain about the money market mutual funds and liquid funds. Suppose he is the investor and he is saving the amount in savings account. He wants to park this amount safely because after 11 to 12 months, investor is planning to go for a foreign trip, or he wants to buy a new car, or he wants to pay the down payment for a new house. The good thing is that investor is saving it in bank because he wants to meet this demand for short term, and he anticipating that equity mutual fund can be volatile in the short run. Savings will have advantages and disadvantages. The first have advantage is about money is protected against the loss. And the most disadvantage is that money loses purchasing power over the time due to the inflation. In these cases, investor can opt for money market mutual funds. Why to consider money market mutual funds? Because it's a short-term focus, low risk, better return than saving account, and mostly high liquidity. Where money market mutual fund invest? It invests in certificate of deposits, commercial papers, repurchase agreements which is called as repo rate, treasury bills, government bonds, and bank acceptance. Treasury bills. It is also called as T-bills. Short-term government securities with maturity of 1 year or less considered very low risk. Commercial paper. Unsecured short-term debt issued by corporation to fund their immediate operational needs. Certificate of deposits. It's a time deposit issued by banks with fixed maturities and interest rates. Repurchase agreement is also known as repos. Short-term loans where securities are sold with an agreement to repurchase them later, often used for overnight liquidity. Bankers acceptance. It's a short-term credit instruments issued by the banks, often used in international trade. These money market instruments are highly liquid, allowing investors to easily access their money, often with same day or next day settlement. It's a safety and stability. They invest in low risk short term debt instruments, making them one of the safest investment option. And next one is about the diversification. By pooling investments across various short term securities, they reduce risk compared to holding individual instrument. These money market mutual funds are managed professionally, so it has a professional management. Fund managers actively select and monitor investment, ensure optimal returns while maintaining safety. So the money market mutual fund provides a modest returns. While yields are lower than riskier investments, they typically offer better returns than traditional saving accounts. The convenience. So many funds allow check writing privilege or debit card access, making them function like a cash account. These features make money market mutual fund ideal for parking cash, emergency funds, or short-term saving goals. However, they are not suitable for long-term growth due to their modest returns. These are the few top money market funds. These are the direct plans. If you notice the 1 year is more than your savings account or maybe more than the FD returns. And next short-term investment is liquid mutual fund. Liquid mutual fund are a type of debt mutual fund that invest in very short-term, low-risk money market instruments. These instruments include treasury bills, commercial paper, certificate of deposits, and other government securities with the maturity up to 91 days. Liquid funds are also known for their high liquidity, meaning investors can easily and quickly redeem their units, often within 24 hours. They also offer relatively low risk and stable return compared to the other investment options, making them a popular choice for parking surplus fund for short-term period. Here a more detailed explanation of the liquid mutual funds. Low risk investment. Liquid funds primarily invest in high liquid and low risk money market instrument. This means The risk of losing your investment is minimal compared to the other mutual fund categories like equity funds. High liquidity. As the name suggests, liquidity funds offer high liquidity, allowing investors to easily and quickly redeem their investments. This makes them ideal for investors who need quick access to their funds or want to park their money for short-term period. Short-term investments. Liquid funds are typically used for short-term investment goals such as parking emergency funds or short-term savings. Stable returns. While liquid funds don't offer high returns like equity funds, they provide stable and relatively predictable returns. These returns are generally higher than those offered by savings account or fixed deposit. Low volatility. Due to their focus on short-term, low-risk instruments, liquid funds experience lower volatility compared to other mutual fund categories. This means the value of your investment is less likely to fluctuate significantly. Here are the few top liquid funds in India. As you can notice that 1 year returns are slightly higher than FD returns. Thanks for watching. If you found this video informative, don't forget to like, comment and subscribe.